Goodman Works presents Goodman Wave Theory, the 6 and 6 Forex trading setup. This Goodman setup is named the 6 and 6 because it requires 6 swings and 6 qualifying parameters between those swings. The 6 and 6 setup may also be qualified as a trade candidate with Goodman inward and outward analysis. To get you started, this video will focus on the jumbo and reversal parameters, entry, stop loss and take profit. This introduction will show you how to identify the 6 swings and the 2 most important parameters, the jumbo and the reversal. It does not include Goodman inward and outward analysis of the 6 and 6 setup. But this basic setup is fully tradable as explained in this video. The 6 and 6 may be effective for all Forex traders, guerrillas, scalpers, day traders, and position traders. It may be used at time frames from 1-minute bars to monthly bars. Currency trading is an ideal arena for the 6 and 6 setup. The high ratio between the take profit and the stop loss is one of the main attractions of this Goodman setup. The first step to the 6 and 6 setup is locating a jumbo swing on a chart. A jumbo is a price movement in one direction which spans most of the visible chart view. There are flat, matrix and wave jumbos in Goodman Wave Theory. We will focus on the flat jumbo in this video as it is the easiest to see on a chart and requires no further analysis. This is an example of a flat jumbo swing. Note the minimum fluctuation between the band lines and the consistency of the slope. The defining characteristic of a flat jumbo is the absence of any significant price movements against the primary price direction, in this case, down. Here is another example of a flat jumbo swing. Note, again, the consistency of the slope. This is an example of a matrix jumbo swing. The band is wider, but overall the slope is steady. A 1, 2, 3 is formed with the matrix jumbo swing. This is an example of a propagation or wave jumbo. Matrix and propagation jumbos provide additional information to qualify the 6 and 6 setup, but require additional analysis using the Goodman Wave Theory 3C principle. For now, consider only flat jumbos for your study of the 6 and 6 setup. The first step of a 6 and 6 setup is waiting for a 1, 2, 3 to form at the end of the jumbo swing. It must be in the opposite direction of the jumbo. This is called the front matrix and represents the first 3 of the required 6 swings for the 6 and 6 Forex setup. Here is a jumbo swing with a front matrix 1, 2, 3, moving in the opposite direction at the end of the jumbo. In Goodman Wave Theory, a 1, 2, 3 is called a matrix. It is composed of 3 swings. The first primary swing or FPS, the secondary swing or SS, and the second primary swing or SPS. The points of swings also have names. The initial point of each swing component is called the beginning point or BP, and the final point is called the ending point or EP. The middle point is called the tipping point or TP. If the 1, 2, 3 is less than 10% of the jumbo swing, it is usually too small to consider as a 6 and 6 front matrix. This 1, 2, 3 is too small for the jumbo behind it. But even if it is initially too small, keep watching. It may propagate into a larger matrix. In Goodman Wave Theory, 1, 2, 3s propagate into larger and larger 1, 2, 3s. If the front matrix is more than 35% of the jumbo swing, it is usually too large to be considered a 6 and 6 setup front matrix. There are exceptions, depending on the final risk-to-reward ratio for the setup. For example, if potential profit is more than 3 times potential loss, a front matrix up to 50% of the jumbo may be considered as viable for a 6 and 6 setup. The front matrix does not need to be an ideal measured move. In most cases, as long as the second swing stops before the beginning of the first swing, and the third swing extends past the end of the first swing, it is usually enough to be considered the 1, 2, 3. All of the above examples would be considered a valid 1, 2, 3, as long as they met the overall size requirements just discussed. Nor is time a consideration at this point. How long it takes a swing to form. It is best to watch the swings with their respective BPs and EPs than to watch the bars, which may be confusing. There are 2 exceptions when the 1, 2, 3 is not considered a true 1, 2, 3, and therefore not a 6 and 6 front matrix. The second swing must be at least 25% the price value of the first swing. That is, the SS must retrace at least 25% of the FPS. The examples above are just one swing, not 1, 2, 3 matrices. The other exception. The third swing SPS must not be more than twice the length of the first swing FPS. The 2 swings above cannot be considered as 1, 2, 3s. Remember, the entire length of the 1, 2, 3 should normally be less than 35% of the jumbo swing. Goodman Wave Theory has made an extensive study of 1, 2, 3s including stick, breakaway, short swing and weak extension matrices. But use the above guidelines to begin a study of the 6 and 6 setup. It is best to learn the basic pattern first, the refinements thereafter. If the front matrix requirements are met, watch for a back matrix 1, 2, 3 to form. Its primary direction must be back in the same direction as the jumbo swing. There are 2 additional requirements for a valid 6 and 6 setup back matrix. With the formation of the back matrix, the 6 swings of the setup will be completed. The first back matrix requirement, the ending point of the first primary swing must occur before the beginning point of the front matrix. The setup on the left is qualified to continue as a 6 and 6. The setup on the right is not qualified, and would be dropped from consideration at this point. The arrowed jumbos indicate only a portion of them is shown so that detail of the 6 and 6 may be provided. The second back matrix requirement, the ending point of the second primary swing must occur past the beginning point of the front matrix. But it must not extend more than 50% of the price value of the entire front matrix. The setup on the left is nearly ready to trade, pending an entry signal. The setup on the right has extended too far into the reversal zone and is DOA. The ending point of the jumbo is the starting point of the 6 and 6. The first 1, 2, 3 is the front matrix. See the green rectangle. The second 1, 2, 3 is the back matrix. See the red rectangle. The horizontal line is the baseline. See the blue arrow. The EP of the final swing or back matrix SPS. EP is the reversal point. See the green circle. The area from the baseline to the reversal point is the reversal zone. See the grey rectangle. The body is the area bounded by the 6 swings and the baseline. The front body is the area defined by the front matrix and the baseline. The back body is the area defined by the back matrix and the baseline. Price action in the reversal zone must be watched closely. The trader is here looking for prices to move back into the 6 and 6 body in one of 3 patterns as an entry signal. Here is an example of a 1-bar reversal in the 6 and 6 setup. Prices enter and exit the reversal zone and close in the body in a single bar. If you follow candlestick's reversal pattern, this is similar to a shooting star. Here is a close-up of the 1-bar reversal from the previous chart. It shows prices re-entering and closing in the 6 and 6 body. Here is an example of a 2-bar reversal in the 6 and 6 setup. Prices close in the reversal zone for a single bar, then reverse and close back in the body on the second bar. The 2-bar reversal may occasionally have 1 or 2 intermediate bars which do not alter the basic shape of the reversal. The key is for prices not to extend further into the reversal zone, especially on a closing basis. Here is a close-up of the 2-bar reversal. Extra bars are of no consequence as long as they do not trend further out of the reversal zone, and closes of the bars are closely bunched near a single price. In a bull reversal, prices move back into the body across several short price bars, usually forming something of a parallelogram. With the bull reversal, the trader may allow prices to initially dig deeper into the reversal zone, as long as they immediately begin the bullish formation back into the body of the 6 and 6. Prices must drift back into the body, not further into the reversal zone. In a bear reversal pattern, the parallelogram still points back towards the 6 and 6 body. Typically, closes of these bars are also closely bunched together in both the bull and bear reversals, as prices are unable to make further headway into the reversal zone. If all the above conditions are met, the trader buys, or sells, the first time prices close back into the 6 and 6 body. Similar to the entry, the stop loss is also close only. If a close-only stop loss worries you, use a conventional stop loss. But be prepared to re-enter if prices reverse, and do not close below the lowest point in the reversal zone. Here is an example of the stop loss on a 6 and 6 setup. On 15-minute charts, a typical stop loss is 15 to 20 pips. Always consider the risk-to-reward ratio before entering any trade, no matter how good the setup appears. Here is an example of the close-only stop loss not being elected. Prices re-entered the 6 and 6 body before closing. This happens quite frequently, as other stop losses are hit, and the vacuum of orders forces prices in the opposite direction. There are 3 profit targets in all Goodman Wave Theory setups, including the 6 and 6, the under, the over and the line. For now, we will simply use the under. But typically more profit may be taken by closing one half the trade at the under, and the other one half at either the over or the line, depending on specific conditions. The under and over take profit targets are found by overlapping the price value of the 6 and 6 body from the apex to the baseline, and both adding and subtracting the price value of the reversal zone. The target nearest the entry is the under. The further price is the over. The wider the reversal zone, the greater will be the distance between the under and the over. For now, take profits at the under. Always subtract the spread from all take profit targets. The risk-to-reward ratio, stop loss to take profit, is very high for the 6 and 6 setup. It is rarely less than 2 to 1, often over 5 to 1 and as high as 10 to 1. Some Goodman traders take the under profit either at the under or at a fixed ratio of 3 times the stop-loss value, whichever occurs first. In this example, 3 to 1 profit to loss occurs long before the under. It actually occurs before prices have exited the 6 and 6 body. Thanks to the naturally higher risk-to-reward ratio, there are a variety of effective money management schemes with the Goodman 6 and 6 setup. Here is the complete schematic for the Goodman Wave Theory 6 and 6 setup. It is taken from the Goodman 6 and 6 setup manual. Here are 2 completed 6 and 6 setups, the first for a buy, the second for a sell. These are from a 5-minute time frame chart. Here is another example of a 6 and 6 setup trade. This on a 1-week time frame chart. Note the bull reversal pattern as prices drift back into the body. Because of its popularity among Goodman Wave traders, a complete body of theory has evolved for the 6 and 6 formation. This includes inward analysis using the 3C principle and comparative analysis of the front and back matrices. It also includes outward analysis, which considers the 6 and 6 setup's location from the perspective of a higher time frame chart. There are 3 higher-lower parameters and a time parameter, which may be used with the 6 and 6 setup to further qualify it as a trade candidate. There are also a variety of Goodman money management schemes including the waltz, the samba and the fire starter. In general, the more the setup is qualified, the less must be the risk-reward ratio. Conversely, the less the setup is qualified, the greater must be the risk-reward ratio. For more information on the 6 and 6 setup specifically, and Goodman Wave Theory generally, please visit www.goodmanworks.com.
Good trading.